Morning, everybody. I'm Jerry Cronenberg from Mooers Technologies, Inc., and I'd like to welcome you to our latest webinar on Invest with Sarge. I'm joined today by Stephen Sarge Guilfoyle, our markets commentator here at Moomoo. You can check him out every day on the Invest with Sarge account on the Moomoo community. Welcome, Steve. Good morning.
Good morning. Thank you for having me again.
Great to have you. So we're going to talk about a very timely topic right now, which is how to listen to earnings calls. We're right in the heart of earnings season. Many people are familiar with the fact that you can go online and look at a press release, look at the company's earnings at their investor relations site or elsewhere. But some people are aware, some people are not. You can also listen to an earnings call, which most companies have roughly a half an hour or so after they release their earnings. You get the CEO and the CFO and other executives giving more color commentary on what's going on with the company. And they tend to take questions from analysts, not from the public, but there's often a lot of great things to glean there. So we're going to talk a little bit today with Steve about when to listen to these, how to listen to these, what to learn from them, how stocks react, and so on and so forth. I want to remind everybody before we get started that this is an interactive and a live webinar. So we'd like you to join in, and we'd like you to submit your questions via the chat function of this live chat to Steve. We'll try to answer as many as possible. If you submit a completed question, you will get 100 Moo points as a reward. And if we use it during this broadcast, you get another 1,000 for 1,100 altogether. Steve will also try to answer some additional questions at the Invest with Sarge account on the Moo app. So we'd suggest that you check that out as well. While we wait for some questions, let's get started, Steve. So first thing, let's talk about earnings calls. Not everyone listens to them. You can listen to some major ones on the Moomoo app. Otherwise, you can go to a company's investor relations page. They're typically streaming. Why don't you talk a little bit about those? What are they? Who talks? What can you glean? What should you listen for? Give us the 411 on that.
All right. If a company is public and they release their earnings, almost all of them will have some kind of earnings conference call that if you're interested in, you can listen to. Jerry just mentioned that the CFO and the CEO are the primary speakers at these events, but they will have other executives speak. Analysts will also speak who cover the stock, and will not speak, but they'll ask questions. And it's important for investors and traders to really go through a few of these to become comfortable with the format and to know which analysts they think ask the most pertinent questions, which analysts they think tend to be more highly rated at let's say a service like Tip Ranks. This way they know whether it's a valid question or just some new analyst trying to get his name out there by asking something wacky, trying to catch a CFO off guard or something like that. So basically there is a standard format. Like Jerry said, you probably won't be able to ask questions if it's a major company, but if, let's say you're trading the small caps, say you're trading less frequently covered names where there's only maybe 2 or 3 analysts that cover the name, they do allow shareholders, if you're a shareholder, to submit questions. And much like this format here, the operator for that firm will select a few of the questions from the audience. And so you may actually get to ask your question of the CFO or the CEO, whoever is in charge of the call that you're paying attention to.
Right. Sometimes even take questions from guys like me, business journalists. All right. So what are some important things, Steve, to listen for? Of course, if you're really interested in stock, you probably will have looked at the earnings press release, which comes out typically before the analyst call. So what are you getting that you should listen to as an investor that wants to find out about the stock?
All right. Well, you probably when you go into the call, when you bring it up on whatever website you're bringing it up, which is often the investor relations side of the company itself, you probably should already have a copy of the press release up on your screen or maybe print it out so you can go along with them to some degree. Now, they may or may not give you more information than's in the press release. Often in the press release will have the forward guidance in there. Often they won't. They'll say, well, we're going to give that to you later during the call. So you may have all the information, you may not, but you don't have the inflection. You don't have the way they're expressing things, the way they're talking about their future guidance. Maybe they sound less confident. Maybe they sound more confident. Maybe they're excited, and you can pick up on that. And the algorithms that trade the stock after hours or in the morning will pick up on that as well. So you'll see that happen in the options, in the prices of the options, and in the price of the equity itself will move as these as these speakers are speaking and answering questions. So it is something I think you want to have the press release in front of you, so you've actually read that. And if you don't worry if you miss a conference call, because maybe you won't be able to trade it in real time. But I've had nights where, like this week's a very busy week. There'll be nights where I have maybe 4 or 5 positions in stocks that are having simultaneous conference calls. I'm only going to be able to listen to one of them. So I'll listen to the one that I think could do me the most damage. And I will have to read the others because the transcripts do come out after the fact. I will have to either play the replay or read through the transcript. I often refer to read through the transcript because I don't mind reading.
Right, and you'll find that at typically the company investor relations website, I believe, or some news sites. Is that correct?
Yeah, several news sites do provide that. They might not provide for really obscure names, but if you can't find it in the news or at your favorite financial news website, there's a very good chance that under the investor relations tab at any of these corporations, you will be able to find that transcript. And don't go to some company's website and try to find these things, because some of them are up front, like, hey, here's our stuff. Look at our data. We're telling the truth about everything. And other ones bury this stuff. So when you Google it, Google blah, blah, blah incorporated investor relations, and it comes right to the top.
Right. Excellent idea. All right. Let's also talk now. What do stocks historically, in your experience, do during an earnings call? I mean, do they move significantly? I've seen it do different things. But what's your experience been? Go way up, go way down, not react? You know, is it something that you need to be actively looking at as a trader or investor? You got to be on that call because the CEO may say something, the stock goes nuts, or is it more that there's not that much of a reaction? What's your historical been what you've seen?
You have to be mentally prepared for everything. I mean, I bet you more than 90% of the calls, nothing that wild comes out. But in the 7 or 8 or 10% of the calls where something dramatic happens, you really want to hear that, I think, in real time. So when you see, if you're watching the chart after hours chart, you see something popping or something getting crushed, at least you know why. And you can, I mean, you can't trade options off hours, but you certainly, if you're in the equity, you can trade the equity off hours. And you may want to do that. Or you might say, you know what? This is a keyword reading algorithm that's picking up on what's being spoken. But I heard what he said, and he didn't sound scared. He sounded confident. So this is the algorithms overreacting. So you can actually, this is an instance where you'll never beat the algorithms on speed, but you can still beat them on being smart.
All right, potentially, we'll say. All right, let's go to some questions, and let's start with a few that we got ahead of this live broadcast. First one is from Tranfoz, if I'm pronouncing that correctly. All right, please tell me through the quarterly earnings conference call, what are the signals we ordinary retail investors should pay attention to? Steve, we got a lot of questions about this because as this person says, seeing some companies with good financial results, such as Taiwan Semiconductor, we found prices fell instead of rising. That was a big topic of discussion here at Moomoo in recent days. Taiwan Semiconductor seemed to beat, and then the stock actually fell. So the person asked, is there anything we overlooked during the conference call? Can you talk either in general or with Taiwan Semi, what you saw or what people might look at, why things happen where a stock may appear to beat on earnings and then fall? What's your thoughts on that, Steve?
Well, that can certainly happen. And what happened with Taiwan Semiconductor was while the business is doing well, while the earthquakes really haven't interrupted their business really at all, the guidance for the company was fine, but they guided for a weak quarter for the industry. So they guided forward for the industry, seeing a smaller marketplace for semiconductors in general. X memory, they left Micron and Western Digital out of it, but semiconductors in general, they saw weakness outside of, as I said, memory, and outside of demand for the data center / AI. So that middle core of the semiconductor industry, they predict the weakness for, and they are the foundry. They are the foundry to the entire business. So if the big guys still want the AI chips and the memory guys still want the memory chips, they're fine in those areas. But if the middle, the automotive chips and the smartphone chips and those chips, if there's not demand for those chips, they could be hurt as well as the entire industry. So what they did was probably provoke the keyword reading algorithms to pick up on their warning for the entire sector. But no, Taiwan Semiconductor, in my opinion, had a good quarter and is expecting a good quarter. That's a good firm.
Okay, and again, Steve is just giving his personal opinions. This is not for You have to look at your own personal situation before you
Yeah. I
advise.
have no position in Taiwan Semiconductor.
Right. So he's not advising. You have to look at your personal position. And let's just talk about, again, the second part of this question: what should you look to in these calls? So again, people could have picked up again on the forward guidance would have been what they would look at, whereas the earlier press release of the earnings probably showed the trailing results. Is that generally?
Yeah, I mean, yeah, you want to pick up on quite a few things, like the nuances of the call. Let's say, I mean, some CEOs don't really like to get that heavily involved. Some of them skip the call altogether and let the CFO run the whole thing. Some of them will make a cursory statement at the start of it and then stay out of it. And some of them are the apex predator of their firm. Some are like Jensen Huang at NVIDIA, which I have a small position in, but he will basically jump to answer the questions where the executives that work for him are kind of in the background. Then we had Tesla last night. I have a position that one too, but Tesla last night, yes, because the firm's under a little bit of fire, Elon took a bigger role. But normally when Tesla's running smooth, Elon backs off a little and doesn't really get that heavily involved.
Great. For our less experienced investors, let's just point out CFO is Chief Financial Officer. That's the person who runs the books of the company. And algorithmic trading, there is a belief in the markets, I don't know if it's ever been completely confirmed, that much trading at the professional level by institutions are done by computers, and the computers are actually reading the news more quickly than the humans and trading accordingly. So that's what we're referring to there. Next question from Dan Tell. What relative importance do you give the current quarter's earnings versus analyst expectations? How it compares with the trend from recent and last year's quarter, and guidance for next quarter and the upcoming year's performance? Sarge, thoughts on that?
Well, I mean, obviously it's all important. The performance of the firm over the past quarter versus the analyst expectations are highly important. There's probably secondary to the look forward versus what analysts are expecting going forward. So the guidance, in my opinion, outweighs performance, because performance is in the past and markets tend to be forward looking. So while past guidance might force a revaluation of the stock, and that is very possible, I think forward guidance is much more likely to do so, being that most traders will realize that they're either correctly positioned or incorrectly positioned based on the forward guidance. They both matter, and they both can move the stocks and the options for sure. But I think forward guidance has become more important in recent years. That wasn't always the case. When I was young, it was all about performance, but now forward guidance, I think, is key number one.
All right, we got a two-part question. I guess we maybe talked about this, but let's see if anything else here. First question: what metrics or KPI does the company typically emphasize during earnings calls, and why?
Well, as we mentioned, the overall performance of the firm is key, and the guidance is key. But the firm might also speak about segment performance. Let's say there are 4 or 3 reportable segments within the firm. They're all going to have their own metrics, their own sales, their own margin, their own operating income, and this is really key, because within that you're going to see whether a firm is growing in the right spots. If a firm might have sustained legacy business, but it's eroding over a number of years, so the overall cash flows remain healthy for a while, so you think the firm's doing all right, but where the firm needs to grow, where it needs to evolve, you might not see that, or you might see that in a firm that isn't historically that strong. So you do have to pay attention to segment performance. Well, not every firm has reporting segments, but most large firms do. Last night, the Tesla call, for instance, the Tesla's automotive is obviously coming in a little bit for Tesla, but the storage business, the energy creation and storage business is growing. I think, if I recall, it was something like 7% last night, and the services business was growing something like 25%. So those are smaller businesses for Tesla, but that's where the growth is. So come next quarter, we probably want to see more sales in that area, because we know the automotive business is going through some kind of transition.
Let's go to the second part of that question. I think you've sort of touched on it, but it is a good point. What are some indicators of concern or potential risks to watch out for? Do you have anything to add beyond what we already discussed?
Well, it's the same things, but then now you're going to the human touch. I think where you have a CFO or a CEO that either aren't in sync or don't sound confident, or they sound like they're going through emotions, mailing it in, something like that. You 99% of the time this is not going to happen, but there are times where you'll come off of this, or you'll see Jim Cramer on television, and he'll say, wow, those guys had an awful call. And you'll see the stock is down big, even though the numbers weren't really bad and the guidance wasn't really bad, because nobody's buying their story.
Wow, that is interesting. So the human touch is still important. All right, next one from Alo Baracco. It's an excellent question. When is the best time to trade on an earnings call? Before, during, or after? Do you jump in on the direction the stock is moving immediately on an estimated beat or miss, or wait until the guidance is released? Any thoughts on that one? That's always a good question.
Okay. Personally, because I'm just telling you what I do, I don't do anything the moment the stock is released. I will take, if I'm feeling good about something, I will take a directional play ahead of the earnings. And if I'm right, I'm right. If I'm wrong, I'm wrong. But more often than not, I will wait for the number to be reported. And then after I see the knee jerk, then try to trade within the trend. So by not doing something immediately, I mean, some people, if you don't trade for a living, if this is not your occupation, you might think doing something the same day is immediate. What I'm meaning is I'm not doing something the first 30 or 45 seconds is immediate. So after I see some kind of trend forming, which might only take 2 minutes, 3 minutes, then maybe I start playing the game. But I don't want to play the game just on knee jerk, because the knee jerk is wrong as often as it is right.
All right, excellent. And the next one is from Bellwether, an options related question. When buying leaps, is it helpful to wait to do so until sometime after the earnings release, assuming that nothing will likely appreciably change? Same question to timing. I mean, now we're talking about leaps, though. Do you move quickly, or do you wait till the dust settles? I mean, we can't give exact advice, but talk about the pros and cons of each.
I like personally to go, if I'm going out to a greater distance on an options play, I like to give it some time, so that if I'm right, I'm right. I'll take my profits when they happen. But if I'm wrong, I have time to recover. So if you let's say that the earnings come out on a Thursday and your expirations are that Friday, you're pretty much stuck. You're right or you're wrong right away. If the earnings are, let's say, I don't know, this Friday, and you give it an extra 2 or 3 weeks on your options expiration, well, you have time where you might not recover your entire loss if you're wrong, but you might recover a portion of your loss, where if the expiration was the next day, the option would be worthless. So I do like to, if I'm going out on a leap of some kind, I do like to give it more time than in my mind I'm really willing to give it.
All right. I should also point out a leap is a long-term long-dated option for those who are less experienced. All right. Next question is from Spider Call, which is the opposite. We've been talking about what would worry you. Here's a positive one. What would you hear on an earnings call that makes you want to slam the buy button? Like a company finally attaining profitability, skyrocketing margins, excellent guidance, consistently increasing revenues, etc. So again, while we can't give exact advice, what are some real positives or potential positives that are things that you would listen for in a call, or someone should listen for in a call, Steve?
Growing revenues, growing margin, segment revenue that's going the right way in the right stocks, all those kind of things. But I wouldn't slam the button when I hear it, because I know the algorithms hear it faster than I do. So I would, like I said, wait for the knee jerk. Then once maybe a little bit, the dust settles a little bit, then try to play the trend that I think I see forming. But I know from experience, because I worked on the trading floor for many years back when humans and algorithms were still fighting for dominance. And in those days, we could still beat the algorithms at speed sometimes, or we could trick them. It was not that hard to trick an algorithm into making mistakes. Nowadays, you can't trick the algorithms and you can't beat them on speed. The only thing you can do is be smarter than they are. And that's what you have to do.
All right. So here's an interesting question. Of course, when we're doing this live, we are just less than 24 hours away from Tesla's earnings call. So let's talk a little about this. I know Steve can't give us specific advice, but the question is, what's the next situation for Tesla, uptrend or going down? Now, we can't talk about that. I want to talk a little bit about what people might look at from the Tesla's earnings call, or the things that you've read about this. when they're deciding whether to buy or sell Tesla.
Elon would come out like he did and claim that they're moving towards autonomous vehicles and that they're moving towards a more affordable vehicle so they can sell to consumers in the middle class. Until now, electric vehicles have really been only available to like more wealthier folks here in the US. And so now he's trying to approach the middle class, and those are positives for the firm going forward. As robo taxis is another place he's going. So he added that, or actually it was in the guidance. So the firm added that, but he took a big role at last night's call, and he is leading. I had a feeling he would come out and try to shake the narrative a little bit, and he certainly did. The stock has reacted well overnight.
Let's go the other way. Was there anything in that call that someone might have gleaned that could be seen as a negative?
Yeah, sure. Free cash flow was negative $2.5 billion for the quarter. I mean, they have a lot of cash in the bank. What are they sitting on? Tesla's sitting on $26.8 billion. So they're not about to run out of cash. But for the past 3 months, up until March 31st, they burned $2.5 billion. So their automotive business is right now a headache. Right now, they're really, electric vehicles have gotten to a point in the US where the people that wanted them have them, or could afford them, have them. And the rest of the folks really aren't that attracted to it. So now he has to create a new lower price point vehicle to see if there's a market down here. Otherwise, he's reached the full elasticity of this market. And I think that would be a negative. So the automotive business right now is really a question mark. They have to evolve, or they have to become a smaller business. And right now they're a big business.
All right, great. Next question, which is an interesting one. We've talked a lot about forward guidance. So what criteria are used to calculate performance forecast? Do you have any thoughts about this? When they say, yeah, we're going to do great on this or that, are they just, where's that coming from? What goes into them saying that, a CFO or CEO?
Well, their own sales trends and metrics is what they're looking at. What I'm looking at is what the consensus is. I go to a place like FactSet. That's my go-to. Other people use other places, and I see what they're looking for. What is the consensus on the Wall Street consensus for forward guidance or for a certain segment, because they do get that detailed. And if you have that, it gives you a sense. You can get some of that stuff at different websites. Probably Moomoo has some of that stuff as well, and you can get some semblance for the big numbers, but for the nuanced numbers, such as segment performance or margin expectations, something like that, it's good to have some kind of service that you can go to that will give you that kind of information. Otherwise, you're going to have to wait to see what other people think, and I'll slow you down a little bit.
So when they say, yeah, the current quarter is good or bad or whatever, they probably have some data. How about for the whole year? They're just extrapolating, or how does that work when they say we expect such and such for the whole year? Well,
they are extrapolating based on the trends of past years. If they know that whatever maybe they sell toys and they know that the last 3 months are the strongest time of the year for toys or something like that. They know what part of the year is stronger for their business, and they can tell if maybe through a quirk of the calendar or a delivery or something, if one quarter has potentially robbed or added to a different quarter. So they might tell you that the past quarter was light, but the delivery we usually get at the end of March, we got at the beginning of April. So even though our March quarter was light, we know already that our Q2 is off to a strong start because the delivery came in a week late and it changed the quarter we have to report it in. So you might get nuanced information like that. So that's something that happens from time to time. And the the algorithmic knee jerk in an instance like that will almost certainly be wrong.
Oh, that's great. All right, next question from Mr. Market. What is the best option strategy to apply a few days before company earnings release date? Now, of course, Steve can't tell you best without knowing all your financial situations. But why don't you talk a little bit about just option strategy in general heading into earnings? What are some different things people can do there?
Well, if you're talking about directional, if you're making a directional play, the simplest strategy and probably the best for me anyway would be the bull call spread if I'm thinking like a bull, or the bear put spread if I'm thinking like a bear on the stock. And this way I put it into a spread, so I reduce the cost a little bit rather than just buying calls or buying puts. But I would get long those spreads and play the name in a directional way. If you're playing volatility in the name on or against rather than directional, then you want to get into the trickier strategies such as the butterflies and the condors and the iron butterflies and the iron condors. And you would, to make a long story short, you would be getting long those names if you were thinking about that there was going to be increased volatility, and you would be selling those names, selling those strategies, or getting short them if you expected a decrease in volatility.
All right, great. Next question is from Trader. Hi, Sarge. Can I ask from your experience, should retail traders trade during the earnings period? I've seen a few traders getting burned from trading during these periods. Now, of course, can't give exact advice, but one option would be, hey, just don't even trade during earnings season. Just wait until a few days have gone by or what have you. What are your thoughts about the pros and cons of that strategy?
Well, I do know quite a few professional traders who don't trade during not during earnings season, but when the stocks they're interested in, when they're the stocks they normally trade, they will avoid them on the, let's say, from the day before earnings until a couple of days after the earnings. And that's there's nothing wrong with that. If you know that you're exceptionally bad at something or you've been burned a few times, you can avoid it. Now, but on the other hand, like how I trade earnings, I will have in my mind what I'm prepared to lose. And it's the same thing as if you went to Vegas for a weekend. You know, I'm not going to gamble on this earnings play any more than I'm willing to lose. This way, I know it's contained. There's a firewall between these funds and the rest of my portfolio. And so then I think it's fine. But otherwise, yes, playing earnings ahead of the earnings release and the earnings call is really akin to gambling.
Okay, we're going to take one more, squeeze it in here. I've been told by people just that there are people who buy right before earnings release if they expect good results. What if they miss analyst expectations? Should I just trust the growth instead or hold on for dividends? Again, can't give specific advice, but any thoughts there, Steve?
Well, that's the danger of what we have created with a very long bull market. That's not something that will work every time. That's something I would advise against, because if we go into a tougher time, if the economy goes into a tougher time and corporate earnings go into a tougher period, the technicals will ultimately change as well. And it won't be as easy as just buying, you know, I'm sure with these FANG names or the MAG 7 names, for probably 15 years, if you just bought these names ahead of earnings and sold them that night, you probably made money 75% of the time. And it would make up for the times you didn't make money. But I think we're at a tricky time. Our fiscal policy is a mess. Our monetary policy is uncertain. I think we're at a tricky time. I would advise against that strategy even during good times, but I'm not sure what kind of times we're in right now. So I would express that I would look for caution at a time like that. I would not look to get long just blindly hoping that the revenues look good and growth is accelerating.
All right, great. And again, advise. Steve doesn't know your specific situation, so this is just general advice. All right, we're going to leave it there. You can certainly check out Invest with Sarge on the Moomoo app every trading day and ask Steve more questions. And we will be back 6 days from this video on April 30th at 9 a.m. Eastern Time, 9 p.m. Hong Kong time to talk about the Federal Reserve. Of course, Federal Reserve meeting is coming up, and Steve will talk about what to look for ahead of, during, and after FOMC day, what to look at from the statement, and what to think about when you're going to trade stocks around that period. So my guest again is Stephen Sarge Guilfoyle. Thanks for joining us, Steve.
Thank you. Thank you for having me again.
Great. And we will see you all again. Happy trading, everybody. I'm Jerry Cronenberg. Thanks for watching.